Good afternoon. My name is Robert Yusupov. I am a mortgage lender, mortgage advisor, and I have a very special guest with me today, Angela Kim from Credit Repair Boss. What an amazing name. I love that name. How did you guys come up with that kind of a name?
We actually brainstormed new company ideas, and it came with that name, and we all loved it. So we went with Credit Repair Boss. Thank you for having
Beautiful.
me.
And speaking of company, how long have you guys been around? How long have you guys been doing this?
We've been in business for 11 plus years. We've been servicing clients all over 50 states, but based in New York. So yeah, it's been over a decade so far.
Beautiful, beautiful. So exactly, um, if you can give me an idea of what a credit repair company does, what does a credit repair company provide services for? Why would somebody want to use a credit repair company as opposed to doing something on their own?
That's a good question. So it's like going to the gym. You could go on your own because it's your New Year resolution, but you can start with it by doing it with a coach. So you're going to succeed and achieve your fitness goal a lot easily and done the right way when you work with a coach. Same thing with credit. There's so much of a limitation as to what you can do on your own credit by disputing with the credit bureaus yourself. However, when we step in as a professional, the end result's going to be so much better and we get things done.
Beautiful. That makes a lot of sense. So a lot of people try to do something on their own. A lot of people try to get results on their own. Hey, I know how to fix credit. Hey, I know that if I pay down some credit cards, my credit score is going to go up automatically, and it's a failure. It's like I'm sitting and I'm waiting, and I say, how much longer are you going to do this? How much longer are you going to try to fix it yourself? And it just doesn't work. So I always believe in hiring professionals. That's what I think is the right way to go. But just to give an idea as to why I wanted you to do this, I've seen you work, I've seen your services, I've seen what great client service you have been providing to people, and I think dealing with professionals is very, very important. Dealing with somebody that gets results is even more important. And sometimes people ask me and say, "Hey, how is it? How much are they going to charge me? Or what is the fee for this? Or does it work?" And I always say, "Listen, I don't know what the fee is. You're always better talking to the professional because every single person is going to have a different situation, right? One person might need a little credit boost, might one person may need something else to be updated, something else to be added on to their credit. Somebody maybe not even have any credit scores right now, and they might need to have credit scores added on. So I'm sure those are all the services that you offer, but everybody's going to be different, right? Is that my understanding?
Absolutely. So the first question I always get asked is, how long does it take to fix my credit? Well, it's like going to doctor's office. You do need to get a diagnosis to know the treatment, how long it's going to take, the cost, and what treatments you're getting. Same thing with credit. I have never seen a same credit report. Even a husband and wife who's been married for decades, their credit's going to look very different. So we give catered advice to each client, and it always starts with taking a look at a three bureau credit report.
So, three bureau credit report. What are those three bureaus for people that need to understand or people that need to know?
Right. So, Rob, when you're giving someone a mortgage, you look at all three bureaus, which is Experian, TransUnion, and Equifax. We can't skip one bureau because you look at all three, and based on the three, you go off of in the middle. That's what the middle score is. So we do need to carefully comb through every single remarks on each of the credit report.
Okay. So you're saying that there's three. I've heard of a fourth bureau, right? I've heard of something that is what is the fourth one called that nobody uses? Innovis?
Yeah.
Innovis?
So it's not streamlined yet because I think for the foreseeable future, things are going to stick with the prime three bureaus. Although they have no government relation, they're not federal companies, but they're federally monitored. But I think all the auto dealers, all the mortgage banks, and all the lenders are going to keep focusing on the current three bureaus for now.
Okay. So I'm just typing up all the three bureaus that we have. So Experian, so that it shows on the bottom so people understand. When you're saying for car companies, right? For mortgage companies, I know that we look at all three bureaus, and we're going to use the mid score from all three, right? It doesn't necessarily mean what the mid score is going to be. It's just if the middle score, if let's say you have three scores, if let's say you have 700, 710, and a 720, the mid score is not the highest, not the lowest. We're going to go with a 710, right? What do the car companies usually look at?
So that's a good question. So when you are shopping for a car, they look at your FICO credit score, which is going to look at Experian, TransUnion, and Equifax. But on top of your FICO credit report, they also look at your auto report. So although on your credit report, it may not show any kind of derogatory remarks on an auto history before, but they cross-reference that with the auto report. Sometimes if certain accounts are over 7 years, may not be reporting on your credit report. But if you've had any repossessions or anything like that, they're going to cross-reference it with a second report. So it's really good to know that you have clean title and clean report on the auto side as well.
Okay. On my end, I know that the better the credit score, it's like I could work with low credit scores, but the better credit score ends up in resulting a better interest rate, right? I think that's super important. It's like if you're going to get a better interest rate, you're going to have a lower monthly payment, you'll have better results, and you'll just have a lot more options that are going to be open to you for mortgage purposes. I'm certain that's the same exact way of what it's going to work with when you're going to get a car loan or when you're applying for a credit card. When you're anything to do with credit applications will require a better credit score, right? It used to be back in the day we needed 700 credit score. Now we have 720, 740. Some banks even require 760 credit score. What is your suggestion? What is your advice on what needs to be done for people to maintain and have better credit scores?
Right, that's a good question. So, in order to have good credit, you first have to know what's on your credit report. So, I think the biggest problem that all of us are facing is we're very reliant on our phone and very reliant on our credit apps like Credit Karma or Experian. But the truth is that Vantage credit score that you're seeing on your phone or Amex giving you a free credit score, that's not the credit score you're going to see when you sit down with Rob to get a mortgage.
100%.
So first, you have to check your credit and know what your accurate credit score is. I think that's the important starting point.
Okay. Do you believe in the Credit Karmas or whatever it shows on the banking website, credit scores, or is there something that you would suggest to people what is more reliable?
Right. So Credit Karma is a company. They make a lot of money and they are able to push out millions in TV ads because every time you freak out and you click on it because it says your score dropped 100 or 200 points, they generate revenue by suggesting you apply for this and apply for that. So instead of just looking at Credit Karma, which does not give you Experian, so a lot of clients sign up for free membership with Experian, but it's really hard when you were trying to piece the puzzles together. You're looking at one piece, and one piece. So I really recommend taking a look at a tri-merge credit report where you can take a look at all three. Our company recommends Identity IQ. $20 to pull a one-time credit report, not a hard inquiry, but we can take a look at everything that you've done in the last 7+ years. So that's a good way to
Beautiful.
check.
Beautiful. And you could help somebody set it up correctly. Like for somebody that doesn't know how to set it up, it's something that they would reach out to you so that you can give them. Okay, that's a good pointer. Being that you mentioned Identity IQ, I think what's even more important about the credit scores is the hacks, the scammers. It's every time you hear my credit got hacked or my information got stolen or somebody used my credit card. Even though the bank refunds the money, even though the bank brings you back whatever was used by somebody else, right? Your information is still vulnerable, right? Because if they had information to your card, now they have more information to something else, and you could just be a victim to identity theft. And then it's just so much harder to clean that mess up.
Exactly. You're more exposed to future identity theft. So we help clients with their personal and business credit, but actually, identity theft litigation is a huge part of our practice. Um, you can retrieve your money from Chase Bank because if you had $10,000 in there, a scammer hacked into your account, got the money, you could try to get it back. However, the damage that a scammer can do to your credit is not limited to just the cash in the bank, it's infinite. I've seen even mortgages, HELOCs, I know it's crazy, auto loans, credit cards, lines of credit taken out when they have no idea. So it's really important to check your credit, not just once a year when you're trying to apply for something, but more often. But we can help to get every damage done on someone's credit report to be removed off of credit. But most importantly, we don't want that to ever happen again. So we can also prevent that for the next several years.
Wow. So I know that you're saying that you can help people with that. If you go on, let's say Google, and you type in credit repair company, there's many companies that are advertising, that are paying for sponsored ads in order to push their services, and they charge exorbitant fees, and it's like they will charge you monthly. Why would somebody work with you to get this done? Like, what is the reason, besides the fact that you're trusted, besides the fact that you've been in business for 10 years, it's what is it that your company specializes in? Do you work with law firms? Do you work with disputing just that's what I want to know. Why would somebody do that?
Right. I think most important key factor that sets us apart is we're not one of those small credit repair companies. So if you Google credit repair, first companies that pop up are creditrepair.com or Lexington Law. So they charge you 150 or a couple hundred a month. But if you stick with them for a year, you've already spent close to 2,500 plus. But guess what? Nothing would have been repaired. Why? If it's your debt, and if you write that, oh, I was not late on my Chase account, that's not going to come off. A lot has changed in the last 10 years. Traffic tickets don't end up on the credit report anymore. Parking tickets don't show up on the report as well. So we are partnered with a law firm called Sanders Law. We take a different approach to credit. We want to fix your credit and do it only once. It's like a house. If it burnt from a fire, you don't want to just go back in there to try to clean it up a little bit. We want to gut it, but repair it. Why? Because you want to live there again. So we take that same approach to credit. If a client has a lot of debt from before, it cannot be shoved under a rug. We want to help you fix the root of the problem so that you can leverage your equity with Rob or be able to purchase a second property. We could only do that once you have better credit. And as Rob said before, in current economy and current interest rate, better the credit, the more money you're going to save in the long run. So yeah, that's what really sets us apart.
If I could ask you from a perspective of a first-time home buyer, right? Some people don't know what their credit scores are. Some people, they don't care about their credit score because they didn't need to look at their credit scores.
Right.
Hey, I'm a first-time home buyer. I never had to use my credit before. Everything was on my parents' name, or I just never did anything that required a good score. What specific actions can a first-time home buyer take to begin improving their credit score months in advance prior to their purchasing of a home?
Good question. So first step would be checking credit. You'll be surprised how many inaccuracies there could be on your credit report. So I've seen even a lot of juniors and seniors mismatch of information where something that's not your debt that could be on your credit report and hurting you, from getting you approved for a larger amount of loan, or not even helping you get any kind of approval because certain debt that's not on yours might be reporting on there. So check for inaccuracies. And most important tip that I always give to everyone is befriend your banks. Banks are relational. So if you have multiple accounts with Chase, Amex, for example, if you're not on time with them, then guess what? It's going to affect your credit because being on time is more than 30% of your credit score. So make sure you have auto payments in place so that you're never late on your payments with any of your credit accounts.
Interesting. So it's not good to have a lot of accounts open? Is that what you're saying?
So it's good, but you shouldn't have 30 plus credit cards because your credit file is stretched thin so much. So how it works is if you have let's say you have 3 accounts, one is 20 years old, second one's 20 years old, and you just apply for a new credit card, then your average credit history is no longer going to be 20 years. It's going to be 20 plus 20 plus 1 divided by 3. So you've essentially shrunk your credit history in half. So applying for credit too often is not a good idea. But if you have around 15 open accounts or so, it's a healthy number. But yeah, be careful, especially when you're trying to apply for your first mortgage to buy your first home. If you have too many inquiries, banks are going to see it as a cautionary mark, means that you're in need of money. So be careful when you're applying for too many inquiries at once.
Wow, that's good to know. That's good to know. And inquiries also lower your credit score, right? Once you there's a myth that if you do too many inquiries, it will drop your score. If you do it within a certain amount of days, it'll drop your score. Some people say 14 days, some people say 45 days. What is that real answer? What will
I
actually
am
drop your score?
Right. So I'll be honest with you. There's a lot of different theories on it. Some people say it's 7. Some people say it's 14 days. I would say it's usually within the 2-week time frame. However, regardless of that, it's not too good to have your credit checked too many times, because although your credit score may be deducted only a few points because whatever you apply in the last 2 weeks are bundled when it comes to deduction of your credit score. But guess what? When you pull someone's credit report, you are going to see an itemized list of how many inquiries you still had in the last 2 years. So I would still be careful with that, and have your credit pulled only a couple times when you're trying to shop around for a vehicle or any kind of lending needs.
Interesting. Very good to know. Can you tell us about the short term versus the long term strategies for credit improvement for somebody who's buying a home, like a
Yeah,
prospective home buyer?
right. So short term could be someone who's already in contract or about to sign a contract, and you know that your credit's not good. It's really important to touch up certain things on your credit report. If you know that you owe money to Verizon, you know that you owe money to Progressive from your old insurance bill, then I would speak with you immediately so that we can touch those things and potentially get them off, so that Rob can first pull your credit and pull your credit in a few weeks and price you out with a better credit score so you get a better rate on your interest. Long term as well, if you've suffered during COVID because your business went down or things has just not been great because of what's going on with your finances. If you know it's a heavy file, we got to start early. So prepare now to sit down with a professional to see what's on your credit. If you have 10 things on your credit that need to be addressed, then it's better we start now and as soon as possible to plan ahead. If you want to buy at the end of the year, you know you have a lot of things on your credit, you need to save up for it, then maybe right now is a good time for you.
Very good. Very good. How often does somebody need to check their credit?
Good question. I personally check my credit every month, and I check my clients' credit every month as well. Why? Especially with fraud being so prevalent, it's important you check your credit periodically. So at least every 35 days is recommended. But if you have a credit monitoring service like Identity IQ, I'm more than happy to send out the link to everyone so you can get a discount. I think if you go on their website directly, they charge $30. But because we've been sending all the clients their way to give better service, it's only $20. But if you have Identity IQ, they alert you right away. The moment that someone's getting hold of your information on the dark web, you get notified. If someone tries to apply for a Discover credit card, if you had never had a Discover and something's wrong, you also get alerted. But check your credit at least every month. If you are too busy, you can't do it every month, then do it at least every quarter. There could be a lot of changes on your credit in a span of month or even 1 quarter.
Guys, I think that's such, I mean, for everybody that's going to be watching, it's the cost to prevent an accident that's waiting to happen. It is so much better. It's just so much cheaper than having to fix something once it's already done, right? So this Identity IQ, do you have any ownership in that company? You keep talking about it,
No,
or are
we
they
don't.
just that good?
They're just that good. Yeah.
So if you're paying $240 a year compared to how much money you could lose if you have identity theft, it's your time, it's your money, it's frustration, it's trying to win back your life, it's trying to win back your freedom, because everything revolves around credit. You, yes, like I said, some credit card companies will refund the money back, but your information's out there, your social is out there. you are a victim for them to open up accounts for it. It's just scary as to what happened.
Right.
One of the things that I always recommend to my clients is when we start the process of the mortgage, I tell them to sign up for optoutprescreen.com. I think that's super important because once I pull credit, even though I'm paying a tremendous amount to pull somebody's credit reports are so damn expensive today. It's crazy.
I know.
And the price just keeps going up. But even though I pay a lot of money to pull somebody's credit, Equifax, Experian, and TransUnion now sell off your information. They
Right.
have every right to sell, just like all the banks. When they pull up information, they have your information that's allowed to be saleable, and then
Right.
they sell it as trigger leads. So you're going to have other mortgage companies, credit card companies. Somebody knows that you're shopping around for a mortgage. They'll sell your information to 500 different companies, and all of a sudden your phone's going to blow up. I've seen that. A client called me up. He says, I got 72 phone calls today from different companies. Like, what's going on? Did my information get stolen? I'm like, no, it's just the credit companies that are selling your information. So I highly recommend the opt-out pre-screen. Do you have any feedback on that?
I absolutely recommend it. It's actually the same. Even if you shop for a car, the moment you walk out from the dealership, you're going to get a lot of phone calls. A lot of people are soliciting, and they even mail you, text you now, they email you. So unfortunately, they sell your information, and that's one of the biggest revenue maker for their business. So definitely opt out.
Crazy. What does it last for 5 years once you sign up?
Yeah, I believe it's 5 years, unless they've changed
Okay.
it recently.
So you're saying sign up for opt-out pre-screen. You're saying sign up for Identity IQ to monitor your credit.
I would highly recommend that.
Okay, that's very good tips. What are some credit myths of home buying that you could debunk and tell us whether it's accurate or not?
Yeah, great. So this is huge. Closing my unused credit accounts will improve my credit score. So that's actually absolutely untrue. Believe it or not, your oldest credit card that you've taken out at the orientation of your college seminar is going to be the most valuable credit card on your credit. Why is that? It's probably the oldest account on your credit report. So make sure you don't close, especially any old accounts, just because you are more loyal to Amex or Chase or certain banks. It's important that you keep your old accounts. The moment you
Okay.
close out an account, you're going to get a notification that your score dropped a lot, because that credit account probably was anchoring in as a pillar on your credit to give you that depth of your credit history. So what I would suggest is, if you have that Macy's credit card or that first $1,000 credit card you've ever gotten with them, befriend the bank. Make sure you use that card. Maybe designate that card, add it to your Apple Pay or your Google Pay to use it for groceries and bills. Banks are relational. Once you have a relationship with them and don't close out your old accounts, that would really help to grow your credit. Second myth is, if there's applicant A and also B, the person with the better credit score is going to be determining the interest of the mortgage for both. And that's not true. Always, if there are two applicants, it always goes off of the lower person's credit score. So it's really important that you look at both persons' credit and make sure the person with the lower credit score could be bumped up so that you can get the better credit and also better interest rate.
But why my credit is 800? It doesn't matter what my co-borrower is. Yes, it does. I hear that all the time when there's a co-signer. It doesn't matter what their score is. I'm the main borrower. I have the 800 credit score. No, but it's exactly what you said. It's the lower credit score that will determine the rate, regardless of how perfect the credit score is for the main borrower.
Yes, exactly.
Yeah, that is very, very important. So you're saying do not close credit cards. And also when closing credit cards, I noticed if you close more than one credit card at the same time, it drops your score drastically.
It does.
It's like a big hit, right?
It is, especially if it's old.
So you answered, you said maximum amount of credit cards to have at any given time before it starts hurting you is what?
There isn't a number, I would say, to amount of available line of credit that's going to hurt you. It's more so inquiries. So if you apply for too much credit in the last 6 months, anytime you've applied for a mortgage or auto loans, those inquiries stay on your credit report for 2 years. But whatever you applied in the last 6 months hold the most weight on your credit report. So technically, you could have $1 million worth of credit under your belt, and that's okay. But what's going to hurt you is if you use too much of your credit. So if you have a $10,000 credit card and you owe $9,900, and chances are score is going to drop a little bit because you owe too much on that card. So just be careful of DTI, how much you owe on each card, and not applying too often to show that you're in need of money is what you should be careful of.
So the general rule is what? Keep it under 50% of your limit.
So 50 is good, but technically 30% is the safest. And I'm on the conservative side, so I always have my clients say under 20%. So 30 is the important number, 30%.
30% of the limit. I'm just making notes for people that are going to be watching. Okay, so keep balances under 30% of the limit. If they don't have the money to pay it down, what is it? They just call and they increase the limit?
So if banks are relational. So if you have a $10,000 credit card and you've been at $9,900 every single month for 2 years, if you call in for a credit line increase, they're not going to give it to you. Why? Because they don't like the fact that you've been only making minimum payment, and probably also because of your credit score. So if you call in for a credit line increase, they look at your payment pattern as well as your current credit. So you could try, but chances are it's really hard to get that line increase. So it's better to speak with a professional to see where am I bleeding money in? Is there any way I can move things around with least amount of money as possible? So I can give that advice to each client depending on the circumstance.
Okay, credit limit increase. Okay, that's good to know. Do you have any preferences on which credit cards, or will it be different for every individual?
Yeah, it's really different for every individual because if you are dreaming of getting Amex Platinum, one of those cards where there's no limit, you can't get it. If you graduate straight out of college and apply for it, you're never going to get it because Amex is one of those banks where it's tier one. They're only going to give it to you if you have more than 2+ credit history years of your own and also have income to back you up. So depending on what stage you are in your finances and how long it's been since you've been building your own credit, I can advise you what card could be a good starting credit for you, for your daughter who just graduated out of college. As to you, who's had credit history for 30+ years, you have multiple mortgage and also access on your credit, then the type of credit cards that I recommend to you is going to be very different.
Interesting. Okay. So credit, it's going to be different for every person. As far as opening secured credit cards, that's only for somebody that doesn't have credit cards, that doesn't have credit score?
Mm-hmm. So I would say 99% of the times when you have a credit card, it's going to be unsecured. So if you have a $10,000 credit card, it is unsecured because you never went to the bank and say, hey, I will give you $10,000 credit card. I mean, $10,000 cash, give me a $10,000 card. So if you say unsecured, it's probably all the credit cards that we have. But for a person who's never had credit, just graduated out of high school, trying to get first credit card, no one's going to give you a $10,000 credit without having any credit history. So it's called secure because you have to go to the bank and say, hey, I will give you $2,000. Hold it for 7 months, give me a credit card for that same $2,000 limit. So secure credit cards are a good way to start out building your credit for starters.
Beautiful. I think that's important to, like right now I'm dealing with clients that are refugees that are from around that are coming into America. They have socials, but they don't have established credit. So I suggested secured credit cards. I suggested authorized co-users, authorized being added on as an authorized co-borrower. But unfortunately, that doesn't help in as much as it used to. Like before, the bank carried over the credit score. Today, they know it's an authorized credit user, so it just becomes a useless debt on their credit report, right?
Right. Yeah. So Rob, have them call me because I deal with immigrant clients all day where they have the money, they want to buy, they have a social or a TIN number. We can still help to get their credit into 680 or better as fast as a couple months for them to qualify for a mortgage. Yeah. Just doing those little tricks don't help as much anymore, unfortunately. A lot has changed.
Okay. So that doesn't help. That doesn't help. As far as reaching out to you, are you better by email? Are you better by phone? What's a good way for somebody to get in touch with you?
Calling me is the best way to reach me. Usually, if I don't answer, you'll go into my voicemail. I'll call you back when I'm done with my meetings, but I'm very quick to respond. So I always love having the first conversation with the client because everyone's concerns are actually really all different. So you could reach me by texting or giving me a call, and I'm happy to give you advice that's catered to you and your family to meet your financial goals.
So 516-698-4303, right?
It's my direct cell.
4303. So that's number that you could be reached by call or text. Okay. I guess that's important. Okay. Do you do? No, I guess no. So it's just better if they speak to you in regards to that. Any final suggestions on what somebody who already has established credit scores, what would they do to get better credit scores, to get their credit scores above 720, above 740? Not even if they're buying something right now, but just to have it.
So for someone who already has decent credit and you're looking to better your credit, I would say check your credit and ask for a credit line increase to your most frequently used card. So if you have a Macy's card and you haven't stepped a foot in Macy's for 5 years and you ask for a credit line increase, they're not going to give it to you because you never use a
Mhm.
card. Banks make money off of people who use the cards frequently and leave some balances for them to charge interest on. So if you have decent credit at the moment, it's good to have more available lines of credit under your belt. So call up that card that you've been using often and ask for a credit line increase. And really important tip, make sure you update your income because when you apply or try to get an increased line of credit with your current credit card, they look at your credit, but they also want to know how much money you make. Well, your income 5 years ago before inflation is not going to be the income you're making. So make sure you update your income under the setting portion so that it reflects your household income and it gives you a much higher chance of getting approval.
Awesome. That's very good advice. I always believe that the best things to have on your credit report are a mortgage, a car payment, a couple of credit cards. Don't have too many. Don't have too many with big balances. Again, from what I see with my clients, it is super, super important to monitor your credit because it's just there are so many opportunities of somebody that can become an identity victim. It doesn't matter who runs your credit. It's just there's so much that's going on online today, and for somebody to get hacked, for somebody's information to get pulled, for somebody's social um, to be withdrawn or extracted from somewhere and applied, it's easy. It happened to me at least. I got notified. I got a notification from my credit card that somebody just made a couple of purchases in Colombia, and just like at least they send you notifications saying, hey, are you there? Are you okay with these purchases? And again, not every credit card company is going to do that. Unfortunately, people are going to find out when it's too late, when so much money has already been extracted or taken out of the account. So be very, very careful with that. Again, I highly recommend dealing with a professional. Just don't try to do it by yourself. Don't try to save money. Don't, because at the end, if it does happen to you, it will just cost you so much more to try to fix a problem as opposed to try to prevent it. And preventative measures are always much, much better than trying to deal with something later on.
Right. I just
Um,
want to add this. We offer free consultation. And I think what we are lacking in our society is financial literacy. We don't learn this in school, so people make one mistake. It's so hard to come out of that hole. So I have so much passion for what I do, and I love speaking with everyone. So feel free to reach out. We always offer free consultation. The only cost is $20 to pull your credit report on a tri-merge report. That's it. And based on that, I can give you guidance on what can be done, how it can be done, how long it would take for you to be in a position to buy your first home or to buy your second property. So happy to
That's
help.
amazing. That's amazing. I appreciate that. Angela, thank you so much for your time. I think it's super important if you guys are going to be applying for a mortgage, if you're refinancing, everybody's going to be refinancing in about 6 months. But for anybody who's refinancing or purchasing, credit is credit score is one of the most important factors of what we use in order to determine what your rate is going to be. And like I said, the better the credit score, the lower the rate, therefore the lower the monthly payment. So this all ties in together. and Angela and her company are one of the best to get this done. So if you have late payments, if you don't have a credit score, if you have judgments, if you have collections that are old and lingering, each one of us can have collections, but it's just sometimes they send bills and we don't know about it. This is where Angela and her company and the Sanders law firm comes into play, and they will help you, and they'll get results. It just, as long as you listen and you do what they tell you, results will come. So again, Angela, thanks for being on. I will try to connect you with people that need your services. I definitely think it's a must, and we got to help spread the financial literacy and spread information that's needed. It's not a sexy topic. That's why not so many people show interest in it. But until they're in this situation, or until they get their identity stolen, it's not a sexy topic, and then they start looking for it. So we are here if you need any information, mortgage related, credit related. And I wanted to bring Angela on because it makes the puzzle, it puts the pieces together of the puzzle of what it takes to get a mortgage, what it takes to get a better rate, what it takes to close. And like I said, credit is a big integral part of it. So any questions you have for me, I'm at 718-969-7100 or 969-7171. Angela is at 516-698-4303. Reach out to us, and we would be looking forward to helping you.
Thank you for having me, Rob.
Thank you so much, Angela. Take care.
Okay. Take care.